Okay, good morning, everyone. Looking at the US stock markets, the Dow has earlier rebounded from the double bottom formation around the 23,300 points level. Since then, the Dow has crept higher towards near the 25,000 psychological level. However, we did not see the Dow has closed above the 25,000. Instead, the Dow reversed its position and consequently continues to trend lower. And on yesterday itself, we did see a bearish candle was being formed on the Dow after the US bond yields, 10-year bond yields has rose above the 3% level, the highest level since 2014. So moving forward, we'll be monitoring for this 24,000 level closely. It did violate below the 24,000 level yesterday, but it did not close beyond that. So we'll be monitoring the 24,000 level. Should the 24,000 level fails to hold, then we might see further pullback on the Dow Jones towards the 23,300 points or even towards the 23,000 psychological level. In the meantime, any recovery from now will be just limited towards the 24,500 or even towards the 25,000 psychological level on the Dow Jones index. All in all, the Dow is forming the lower high formation and potentially could be forming the lower low formation, implying that this could be the reversal trend or the pullback trend on the US stock markets over the short to mid-term trading period. Similarly, on the S&P 500, we did see the S&P 500 has formed the double bottom formation on top of the 25-50 level. Since then the S&P 500 has recovered towards the 27. It did breach above the 2700 psychological level. However, there's the lack of fall-through buy interest, as following on the next day itself, the S&P 500 formed the shooting star candle and subsequently reversed its position back below the 2700 psychological level. So moving forward, we'll be monitoring for this 2600 psychological level closely. If the 2600 level fails to hold, then we might see further pullback for the S&P 500 towards the 2550. In the meantime, any recovery from now will be just taken as a technical rebound towards the 2700 psychological level on the S&P 500. Okay, some updates on the crude oil prices. It continues to trend on a sideways pattern following the recent breakout above the 66 or 67 US dollars barrel level. Since then, it has been hovering sideways between the 67 towards the 70 US dollars barrel level. And on yesterday itself, we did see the crude oil prices has formed the bearish candle as crude oil prices falls about $1 US or negative 1.4% due to the unexpected build up in US inventory level. So for the crude prices, we'll be monitoring for these two bands, the 67 towards the 70. If this 67 level cannot hold, we might see further pullback for the crude prices towards the 61 or 62. While should the crude prices breach above the 70, further upside will be seen towards the 75 or 80 US dollars barrel mark. However, for now, we'll be just monitoring for potential consolidation phase between the 67 towards the 70 US dollars per barrel level. Okay, some of this on the local front. The FMKLCI has earlier breached above the 1880 level, and subsequently on the 19th of April, the FMKLCI has closed at the fresh all-time high at the 1895 level. After the closing above the fresh all-time high level, there's no follow-through buy interest, and instead the FMKLCI has reversed its position over the next 3 trading days. And yesterday itself, we did see the key index has breached below the 1880 and subsequently closed below the EMA 20 level as well. So following that, we are seeing for potential pullback phase on the FMKLCI towards its immediate support at the 1840 level to see how it holds there. If you can see some of the recovery pattern on top of the 1840, then this could be the healthy pullback for the FMKLCI before the next uptrend to resume towards the 1900. However, on the short to medium term period, we are seeing a potential bearish divergence signal. The price has the key index has been forming the high formation, but the MACD indicator during this period of time has been forming the lower high formation, implying that a potential bearish divergence could emerge should the FMKLCI fails to hold above the 1840 level. For now, any gains will be just limited towards the 1880 or even towards the 1890 level for now. On the FM small cap index, we are seeing some of the pullback pattern on the FM's market index after the FM's market has recovered from the 13,700 points. It has recovered towards the 16,300 points level or 200 points level. However, we're seeing some of the reversal pattern on the FM's market index, as we are seeing a potential pullback towards the recent support of the 13,700 points. So the previous recovery, which is just taken as a technical rebound, similar as these during the earlier part of the year, during the January to February period. Since there's no bullish divergence signal and current juncture on the FM's market index, there's a high chance that the lower liners could be on the further pullback phase. Some of the stocks that you can watch out for today will be firstly is Alliance. Alliance has seen some of the recovery pattern after forming the hammer candle on top of the 10 ringgit and 42 cents level. Following the hammer candle, we did see the good recovery pattern on Alliance as price breached above the EMA 20 level, and on yesterday itself, we did see a follow-through buying interest was noted as price closed above the 11 ringgit and 73 cents level for Alliance. So for Alliance, we could be seeing further technical recovery towards the 12 ringgit and 70 cents, or even towards the 13 ringgit and 90 cents level, with your stop loss point located below the 11 ringgit and 12 cents. And if you can take further risk, then your final defense will be located towards the 10 ringgit and 42 cents level for Alliance. For Gas Malaysia, price has experienced a good consolidation breakout between the 2 ringgit and 75 cents towards the 2 ringgit and 80 cents level on yesterday, after price has performed a good bullish engulfing candle and subsequently closed above the EMA 60 level as well. So following yesterday's short-term consolidation breakout above the 2 ringgit and 86 cents, we are seeing Gas Malaysia could be heading towards the previous peak of the 3 ringgit psychological level, or even towards the 3 ringgit and 15 cents on Gas Malaysia. In the meantime, your support level will be located towards the 2 ringgit and 75 cents on Gas Malaysia. Following the bullish engulfing candle yesterday, we are also seeing the MACD histogram has returned green, whereas the RSI has rose above the 50 level over the past 2 trading days. On JAX Malaysia, we are seeing the previously price has pulled back from the 1 ringgit and 84 cents towards the 1 ringgit and 33 cents level. After hitting the 1 ringgit and 33 cents level, price has been consolidated on a sideways pattern between the 1 ringgit and 40 cents towards the 1 ringgit and 47 cents level over the past 2 to 3 weeks trading period. So for JAX, price has yesterday gap up and subsequently closed above the EMA 20 level, accompanied by some of the rising volumes over the past 3 trading days. On indicators wise, the MACD histogram has already turned green, whereas the RSI has recovered above the 50 level. So for JAX, we are seeing a potential recovery pattern upon the breakout above the 1 ringgit and 47 cents. We can trade JAX towards the first target price at 154 towards the 1 ringgit and 65 cents level. Your stop loss point will be located below the 1 ringgit and 40 cents, and if you can take further risk, the 1 ringgit and 33 cents will serve as the final defense for JAX. For MHB, price has earlier been trading on a sideways pattern between the 70 cents towards the 79 cents level. After the recent breakout above the 79 cents, price has formed a shifting star candle on top of the 86.5 cents level, which coincides with the previous resistance level. After hitting the 86.5 cents resistance level, we are seeing a pullback phase on MHB. This is a healthy pullback, as we are seeing a potential breakout, pullback, and a continuation pattern for MHB to retest the 86.5 cents level. And should the 86.5 cents level were to be breached, further upside will be seen towards the 92.5 cents level for MHB. But for now, over the near term, or at least for the next 1 to 2 trading days, we'll be monitoring closely for this potential trendline breakout above the yesterday's intraday high of 80 cents. So should that be a breakout above the 80 cents, then only we can confirm that this could be the breakout pullback and continuation pattern for MHB towards the 86.5 towards the 92.5 cents level. Your stop loss point will be located below the 76 cents. Should there be a breakout above the 80 cents on MHB? Last two company for today, firstly will be PCCS. PCCS has recovered from the recent low of the 20 cents level. After touching the 20 cents, price has earned from the short-term recovery towards the EMA 20. It rejected the EMA 20 level and pulled back without significant volumes during the pullback phase. And recently, we are seeing some of the higher volumes remain traded on PCCS over the past 3 trading days. So for PCCS, we'll be monitoring for this breakout above the 28 cents level. Should there be a breakout above the 28 cents, price could be heading towards the first target price at 30.5 cents, subsequently towards the 34 cents level. Your stop loss point will be pegged below the 24.5 cents for PCCS. Should there be a recovery from this point onwards, we are seeing a potential higher low formation and a potential higher high formation over the short to medium term period. Last company for today will be EcoWorld. Gold has seen some of the short-term technical rebound from the 96.5 cents level or 97 cents level. After hitting the 97 cents, we are seeing some of the recovery pattern and sideways consolidation phase between the 1 ringgit and 6 cents towards the 1 ringgit and 30 cents level on EcoWorld. So for EcoWorld, in order to see further recovery, we will monitoring for the breakout above the 1 ringgit and 13 cents level for us to trade on EcoWorld towards the 127 or even towards the 1 ringgit and 34 cents level. Your stop loss point will be pegged below the 1 ringgit and 7 cents on EcoWorld should there be a breakout above the 1 ringgit and 13 cents. We need to monitor for the breakout above the 1 ringgit and 13 cents accompanied by some of the improvement in volumes. Only we can confirm for the recovery pattern. If you have any questions, you can put in the chat box and I'll reply you shortly. If there's no question for today, then we'll end the morning briefing. Thank you.